Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, September the 14th. So happy Wednesday, happy hump day. I hope you guys are doing great. Hope your trading is doing great as well. It's been a really tough week for trading. A lot of data coming out this week, or came out this week. And so we've had some really wild swings. Had one today, actually. It's pretty good swing we had today here. We're going to talk about that. I hope you had a chance to check the video I did last week where we were talking about the potential for some big swings in the market this week based on data that was coming out, primarily the CPI that, excuse me, was released on Tuesday. So CPI is a gauge of inflation, was released Tuesday morning before the open. So check this out. I'll do a 3-day chart here. And again, hope you caught my video last week because I said, watch out. There's Tuesday, opening bell, or that's actually when CPI was released. 4175 up there at the high, all the way down here to the close was at about 39.40. That's a 235 point drop, and this is in the ES, which is basically the S&P 500. And we had 1,225 points on the Dow. Big day yesterday. I mean, look at that, straight down. And what happened, if you didn't see, so this is Monday, Tuesday, and this is today. So if you didn't see, CPI came in hotter than expected, meaning inflation did in fact not go down like everyone was assuming that it would. And I talk about this on a bell curve kind of idea. We're watching the inflation's ticking up higher. So it's at 4%, 5%, 6%, 7%, 8%, and then last month we got a number that kind of was like this, and it actually ticked down a little bit. We had a big move higher. So people thought that was the top of the hill and that we were going to start working our way back down. Well, guess what? This one came in and showed that we're not going this way. We're indeed up here now. So it extends this, the top of this hill, this is bell curve, up even higher. So, and puts into question, what will the next one be? Will the next one come in even hotter and then that's going to extend it even more? Or is it going to, was that it and we come back down? And no one knows, right? But that's the reason for this big dramatic change here. And because it's kind of a shock, but it was a binary event. And that's what I was saying in the video last week, is that if the number comes in hot, we're going down. If the number comes in cool, or saying that inflation is dropping once again, because it dropped a little bit last month, tiny little bit last month, then that would be a further confirmation, and we would be ripping higher. Now the next step is, the next step was PPI, which is Producer Price Index, which was reported today, this morning before the open. It was about, I think it was right here. It was basically a non-event. So market went okay, and not, it didn't really, nothing like this, because the PPI came in a little bit cooler, a little bit softer number. 0.1%. So it was basically flat, but is a slight tick down, which is encouraging, especially after CPI numbers came in a pretty good bit hotter than expected. So, that's what's going on the last couple of days. Again, what is all that? Why is all that important? Because the Fed is going to meet, and our number 3 big hurdle is the Fed next week on Wednesday. The Fed will meet and decide what to do about the inflation. The Fed wants to keep ahead of inflation and contain it and all that kind of stuff, right? So we know, or we assume, that we're going to get a rate hike. Interest rates going up. We assume that we'll get a 50 basis point or a 0.5% rate hike next week. Might be 0.75%. Might even be a full 1%. That's a big deal if you're trying to get a loan for a house or for a car or something like that. All makes costs of everything go up, etc. That's why the market doesn't like it, and that's kind of a shock to the market, and thinking that the inflation and the cost of everything that we're seeing is, we're not, we don't see the light at the end of the tunnel yet. And that's very true. And these things typically, the cycle will take 12, 18 months, and we're not that far in it yet. So I don't know, unless it just cooled down very rapidly and the Fed said we're not going to do anything, we can expect for us to kind of be in the cycle for a little while. But again, from a market standpoint, check this out. Let me put this to my regular ES. Okay, from a market standpoint, if we would have had, see that long red line, that was yesterday. If we would have had a good number, then we would probably be, at least up here, maybe going this way. But again, we didn't. So what happens now? Well, this is this little line right here. You can probably see it right there. That's the beginning of the year. And basically all year we've been just kind of going down, down, down. One big hopeful pop here, and I think we just keep going down here. I think it's still too early to tell, but what will probably happen next Wednesday, let me clean this up a little bit. Next Wednesday on the 21st, September 21st, that's when the next Fed meeting is. They'll probably, I think they'll do 75 basis points. Then in November meeting, they'll probably do a 50 basis points or something. We'll have another monthly CPI number that comes out before then. And that's what they're watching, right? So if it comes in hot again, we're going down even further. So, my best guess is to prepare for more downside. But we don't know. This could change on a dime as data comes in a little bit better than expected and that type thing. So as far as that relates to your portfolio, by now you probably have maybe changed your direction on what you're doing as far as buying stocks, or maybe you had some profit and you took some profit and that kind of thing. I do not think this is the time to go in and be trying to buy the dip. We're not there yet. I just don't think so. It would have to be a pretty interesting candidate for me to get really excited about trying to buy the dip here. But in the meantime, what we've been doing is trying to trade this thing on a very short-term basis. I'm not necessarily a day trader, but I've been doing a fair amount of day trading lately, and trading within the next couple of days. So maybe today's Wednesday, I do something that expires on Friday, like an options trade that expires on Friday or something, because we don't have much clarity out any further than that. So that seems to be working very well, actually. We're up nicely for the year. But you have to be careful with it, and and know what you're doing. If you want to see how that's done or join us to do these type trades, join me in the main room at Simpler Trading, or in the bias room where I run a separate portfolio there. Do these trades all the time, and we all do the trades together. So other than that, be light, be nimble, be a nervous trader. Take profits when you get them. Use tight stops on the downside, and just don't put too much risk out there until this thing kind of finds some footing and we get a trend. Because right now there's no trend. It's just very chaotic moves in the market, and you don't want to get on the wrong side of that stuff. So be careful out there. All right, guys, I hope that helps. Hope it makes sense. And I will catch you at the next update. The next big hurdle is going to be, we have retail sales in the morning, but the next big hurdle is really going to be next Wednesday when the Fed speaks. So be ready for that. We might get some big movement there as well. So prepare for that. So thanks for the time. I appreciate it. And I'll talk to you guys at the next update. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me